budget trades. A stock or a sector rather which stood up well, a stock in particular was ITC, which held out the Nifty for most part of the first 1 hour post trade because there was no tinkering with the excise duty or marginal tinkering with the duty. The stock was up 3% in the session. Question mark really is, Ashwini, what can it do from here on? If somebody who's not invested into ITC, what does he do on Monday morning?
I think it's given a strong breakout. You know, what happens is that when there is bad news expected and a stock does not collapse, that means there is some intrinsic strength. And, this event gave it an opportunity to break out above this 215 type of zone. And chances are that ITC, after many months of consolidation, is now beginning a fresh move, one which could take it all the way up to levels of about 240. ITC, the pattern is it'll move sideways for months, then in a couple of weeks it'll make fresh highs, and then again start moving sideways. So I would think that this sort of movement on very high volume is significant on ITC.
Okay, the other sector was power, which a lot of was expected, but not too much came about. There was no import duty on coal, which was abolished, but the basic 5% customs duty exemption to thermal coal for 2 years came about as well. A couple of other moves as well. Mitesh, what do the charts suggest? I mean, there are the usual suspects: Adani Power, Tata Power, maybe throw in a JSPL out there. How do these stocks look on the charts?
Well, Neeraj, I think certainly, there was some kind of expectation built up into the stocks. We saw minor activity happening yesterday and day before yesterday, but very clearly when the expectations were not met, we saw some kind of selling emerge. Tata Power, for example, today broke below the 200-day average, as well as we saw some negative crossover in the short-term averages. I think this could probably head towards targets of about 98 to 97 and can be sold with a stop at about 108.5, 109. The second one is Adani Power. In the morning also it was showing some kind of momentum, and it's just closed at some kind of support at 72 odd levels. So if it trades below that, I think this one could gain downside momentum, go up to as low as about 66. So sell below 72, 71.5, keep a 2.5 rupee kind of a stop loss just above 74.5, and I think 66 is what I would look for on the downside.
Sell below that particular level. Watch out for Adani Power. The other sector was auto, wherein, well, excise duty was hiked 2%, but that was expected and therefore maybe not too much of a reaction. The positive reaction that came into, say, maybe an M&M, which did reasonably okay for itself, was because of the fact that there was no tinkering with the special tax of diesel cars, and that really helped maybe some of the players. So, Sandeep, on the charts, in M&M, Tata Motors, have you looked at the charts of any of these stocks?
Yes, Neeraj, Tata Motors has always been positive, but M&M, what I find is that at around 660, 650, there is a very strong support over the last month or two. It has bounced back from those levels, and today's volumes were on the higher side. Price has also closed near the high of the day. So for me, an M&M would be a buy in the range of, say, 670 to 660, or maybe it on declines to 660 or so. Stop loss of around 645, and I would play for a short-term target of around 715, 720. And if the market bottoms out and if we have an upward rally over the next week or two, which is what I expect, M&M can even go to 760, 765. This would be a little longer term, say 3 to 4 weeks.
Okay, one more sector on which something came and something didn't also was aviation. There was some dollies handed out, but more importantly, maybe the market was hoping for some bit of announcements on FDI or thereabouts on aviation, and that didn't come about. Maybe that was a bit of a disappointment, and the stocks sold off a little bit. Ashwini, come Monday morning, because of the fact that there were no positives that came about in the budget, do you think that these stocks can actually fall further? What would you initiate a trade come Monday morning on these stocks, any of these stocks at the current levels?
Well, probably it's wise not to give too many goodies to a sector that's seen as a luxury, but I think it didn't fall very sharply, so I guess it wasn't really disappointed. But overall, it's not too bullish. It's basically sideways. So Jet, chances are, can decline towards levels of about 300 before it finds support. So around 300, people who must get into aviation should do that. Probably aviation FDI will happen sooner rather than later. So chances are around 290, 300, it again becomes a buy, and on any kind of positive news could rally back up to levels of 360. KFA has a lot of other problems, so that's probably an avoidable type of stock. So I would go with SpiceJet and Jet. SpiceJet again has broken out of levels of 22. Once it gets closer to those levels, I think it's a decent buy. For people who want a smaller ticket type stock, I think SpiceJet can be bought with a stop about 20, around 22, and look for targets about 30, 31.
On to some more specific news and how the stocks reacted. Pharma and Sun Pharma and Cadila in particular. The news that came out was that there was imposition of MAT on partnerships. The higher tax will reduce Sun Pharma's EPS by 10%, Cadilla's EPS by 8%. These are brokerage views, and the stocks duly reacted. The question mark, Sandeep, would be, come Monday morning, you think there is a chance for somebody who, if he gets to short the stocks at the current levels, should he go short? Can these stocks slide further?
Well, the answer is that they are likely to slide further, but can one short at current levels? A little difficult to answer. 2 or 3% upside. Sun Pharma at a level of around 560, I would be more comfortable shorting, and I would talk of a target of around 520. So I see a clear 4 to 5% downside, but when a stock has cracked already 7%, one better wait for a percent or two on the upside and short it.
Mitesh, banking, lots happened yesterday on Thursday and Friday. Aside of the budget or even otherwise, what do the charts suggest? Anything that you spotted?
Well, I think broadly the bank nifty has slightly turned weak, but I've got one pick in each, the private sector bank as well as the public sector bank. HDFC Bank, if you look at the price chart in the last quarter, the stock has gone up from levels of 400 to 530. A couple of failed attempts to get past 530. It's now turning weak, so it's just closed above support of 505. Sell below that, keep a stop at 517. I think 485 is to about 480 is what I would look for on the downside, which is also the 200-day average. Similarly, a Canback in the public sector bank looks weak. It's given some negative crossovers. 462 to about 455 is the downside target, and this one can be sold with a stop at 505.
Okay, stick to banking only, and two-way fungibility of IDRs allowed, and that helped the Stanchart ITR climb up 20%. Ashwini, might open higher as well, but would you be comfortable buying it at slightly higher levels on Monday morning?
This was a basically hyped up IPO, and something new was being tried for the first time. It's been in a range of about 75 to about 90 for a long time, and now it's breaking out of that zone with humongous volumes. So if levels of 90 are sustained for another day, chances are that this could rally all the way back to its IPO high of about 115 to about 118. So given that it's a forgotten stock and is now coming out of a longer term range, makes it extremely positive.
Okay, just about time to get in stock recommendations of our experts. And Ashwini, I'll start off with you. Aside of all that we've discussed, what is it that you would recommend to our viewers?
See, they shouldn't get too bearish just looking at two big down days, but use it as an opportunity to get in. Going short after two down days, may get them trapped at lower levels.
What picks, Ashwini? What specific stocks?
I think consumption has been encouraged, so Bata is a buy with a stop about 680, target of 720. Ambuja Cement is a buy with a stop about 163, target about 180.
Okay, watch out for them. Bata as well as Ambuja, ITC we've already discussed. Sandeep, I'll come to you for your recommendations. What is it that you would look to do on Monday morning?
Well, I would give a buy in Sadbhav Engineering, buy on declines, stop loss of 145, target of 180. This is a 4 to 6 weeks call with a time horizon of 4 to 6 weeks. So I won't be in a hurry to buy on Monday morning, sometime during the week. Right. I have a buy on Wockhardt, stop loss of 545, target of 750. This is also 4 to 6 weeks call. I have a buy in Eicher Motors, stop loss of 1845, target of 2106, and I have a sell on Biocon, which broke the weekly low, stop loss of 255, target of 215. Okay,
Mitesh, we've discussed ONGC. Ambuja and Hindustan Unilever, I believe, the other two recommendations.
That's correct. Neeraj, cement did very well on a day when the market was totally weak. Ambuja is a buy, but typically I would wait for 170, 171 to be crossed. It's just close below that. The structure is positive. So somebody buying it now can keep a stop at 164, look for targets of 180. Ideally, add more above 171 and just revise your stop loss to 168.
Right.
The other one is Hindustan Unilever. The stock has been doing sideways, just given a short-term breakout. 405 is the price target, 384 is the stop loss.